Hello, traders. It is Sunday, September 22nd, and it is time for our weekly video. Really exciting week. We had a new all-time market high. The Fed cut interest rates by 50 basis points. We're going to get into that in just a minute. We've had some great picks that we've been featuring on the long side. If you like this content, please give it a thumbs up. That's what helps all the algorithms. I'm trying to reach as many traders as I possibly can, so that elevates where these videos show up. Also, if you like the content, please subscribe to my YouTube channel because I hope to do more shorter videos during the course of the week. So you never know when they're going to come up. If I have time to record one, I will, so they aren't going to be scheduled per se. So let's take a look at some of my recent picks. And to be fair, I'm going to give you the longs and the shorts because there were some windows of opportunity where we didn't know how the market was going to react. Was it going to go higher or lower? We needed to be prepared for either one of those scenarios. ARM is a stock that I highlighted on this compression breakout right in here. This was during one of the Wednesday events, and there was a nice opportunity to make some really decent money on this. This is a 1 hour chart. You can see how the stock did pull back a little bit, and I'm going to get into that in just a minute because there's a really effective strategy that you can use. A lot of you have mentioned that, hey, I love the new trade signals, but it always seems like I'm getting these alerts or I'm seeing the stock when the trade signal has been in place for a long time, and I feel like I'm chasing. So let's address that because there's a way that when we see these really nice technical breakouts through horizontal resistance in this case, and we get that big push higher, that you don't want to be chasing here. Once you've identified a stock that you really like, okay, so it's got lots of things going for it. The H1 is on a buy signal. Perhaps the D1 is on a buy signal. You've got heavy volume. You've got a breakout above the major moving averages. Perhaps it's a breakout above a trend line. Perhaps it's a new 20-day high. That volume tells you that institutions are in there. It's got relative strength. Checkbox, 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 checkbox on a longer term basis. Okay, you finally got that stock in front of you. And you don't want to lose track of it because you know that a buying opportunity is going to set up for it. It's just a matter of waiting for that ideal entry point. I'm going to show you how to do that. Spoiler alert, ARM is going to be my long for this video again. And I'll show you why in just a minute. So ARM was a long that I highlighted about 2 weeks ago. And I also at that time highlighted TGT, and that was a target short. So let's bring that chart up. And you can see target has rallied. Let's go into that D1 chart and see what I liked about it on the short side. And that was all the way back in here when we had this breakdown below the major moving averages. And you can see how the stock did bounce, but the market was strong. We got that price action for the market. So there was really no reason to take short positions. When I did these videos, I'd mentioned to you, we're going to be waiting to see what the market does. And in that case, that was the follow-through selling that we were looking for the SPY after that awful reaction to the jobs report. But I had mentioned to you that this is where we were looking at it right in here. We had 2 decent days of price action after that long red candle. The halfway point had already been breached. By all means, we did not want to see the market above the 50-day moving average or above the open from that long red candle, because if we had seen that, that was our tell that the market was going to bounce. This bounce was stronger than we would like to see from the short side, and we should be favoring the long side. So there was no reason to take that TGT short, but there was a very good reason to take that ARM long, and that took place on this massive bullish hammer that we had right in here. So after that, I highlighted GE, was the next stock, and that was on the long side. Actually, let me make sure I'm wrong here, because it wasn't. APP was the pick that I gave you last Sunday. Man, was that a good pick. M15 chart. So, last Sunday was right here. Right here. You could have gotten in on APP. The open was somewhere around $111. Look at that stock. That had a high of $128. Yes, this was definitely the stock that we wanted to see, and we had that strong market price action. I didn't give you a short that day. I just gave you APP because the price action looked really good to me. So, Wednesday, before the FOMC statement, I gave you GE as my long, and this was right in here. And we still didn't know what the reaction was going to be to the FOMC statement. Was the market going to rally on the news? Was it going to pull back? And you can see the stock has gone from roughly $184 to $188. Would you have taken that long? You could have. The reaction to the FOMC statement was very muted. We had a lot of chop in the last 2 hours of trading. Market really didn't go anywhere, which was a little puzzling, and we're going to get into market analysis in just a second. But all things told, I saw that as a really, really bullish FOMC statement. We also had a short that I gave you, which was ADBE, just in case that reaction was negative. You can see ADBE, there's the FOMC Wednesday. You can see how the stock has moved higher. And of course, the market has been up pretty considerably. So no reason to really get into that ADBE short. Here's why I like it on a D1 basis. You can see how it's broken below the 100-day moving average. Post earnings, not able to get above the 200-day moving average. This still looks like a really good short to me, but the market is telling us that it wants to go higher. So no reason to take the ADBE short. The GE long looked really good. Then I did a short video on Thursday, and I highlighted Meta as my long during that video, and it was recorded about, I think, an hour and a half, 2 hours after the open. And so there was Meta right in here, and you can see how the stock is actually higher. Take a look at the D1 chart, and there you can see how it's breaking out through all of this horizontal resistance. We have a cup and handle formation. Please go back and watch that video. I think that you're going to see all the different technical reasons that I liked it. And I also had a lesson for you in that particular video, because what had happened was the market staged a huge gap up. And we could see that right here. And a lot of that was related to triple witching. And it was a very important lesson, because should you chase a gap up to a new all-time high, we had that cup and handle formation that I'd mentioned to you. We had the breakout above that major horizontal resistance level, which was the all-time high. What should you do on the open? What type of analysis? Should you buy right away? Should you wait? Please go back and watch that, because I recorded it because there was a very important lesson in it. So if you're looking to learn, it was recorded on Thursday. Meta was the pick. I think you're going to learn a lot if you go back and watch it. It's going to help you, because you're going to be confronted with these same types of situations in the future. And again, the point of all these videos, the point for me going back and showing you all of my picks, is not to brag. It's to show you consistency. It's to show you the thought process that I go through each time. And if you do that over the course of many years, and you look at my videos whenever there's been a big market move to see how we were positioned, were we right, were we wrong, what were we thinking, I think you're going to find that the picks have performed extremely well. And that's what this is all about. So, what do we see happening in the market right now? What took place? Well, I don't have to spend a lot of time on fundamentals because I never really do. We always trade what we see and not what we think. So, the Fed comes out on Wednesday and they cut interest rates by 50 basis points, 5-0. Biggest rate cut that we've seen in many years. So a lot of people would think, uh-oh, what does the Fed know that we don't know? Perhaps they see weakening economic conditions, and now we're going to be heading down that slippery slope where the Fed is constantly trying to cut rates to stimulate economic growth. And that would be a very slippery slope, particularly since global economic growth is not that good. You can look at Japan, you can look at China, Australia, you can look at the whole Asian market situation, not robust growth. Europe, pretty much dead flat. In fact, the ECB has already cut rates twice, so they're trying to get ahead of the curve because their economic activity is not very good. That has not spread to the U.S. yet, and in the Fed statement, Powell said they've looked at the Beige Book, they've looked at the ISM services and manufacturing numbers, they've looked at the PMIs, they've looked at the job situation. They don't feel that there are any signs of economic weakness right now, and they are being proactive. They do not want to start cutting rates when the job market has already started to deteriorate. Okay, well, that's pretty dang prudent. And that came out a number of times in the press conference after the FOMC statement. Thursday, we saw initial jobless claims at 219,000. That is a fairly low number, and it is consistent with good, solid employment. And so that's the dual mandate that you hear the Fed talk about often is they want to preserve job growth and they want to have inflation subsiding. They feel that they have that balance to where inflation has come down enough and that job growth is still intact to where they could cut interest rates. The Fed is in the driver's seat. Okay, this is a really good place for them to be. They don't have to cut, but they have the latitude to do so. So I see this from a technical perspective. That was the fundamental side of it. Now, if you're going to talk fundamentals, you should talk about the corporate valuations, stock valuations. They're pretty elevated. Okay, they are. The PE ratio is at a pretty high level. So there are no bargains here, not right now. And if you take a look at everything technically, we're situated pretty well here. We got to see if we get follow through. So you would have taken starter long positions Thursday or Friday on a swing basis, and we can expect that the breakout is going to be tested. And I put that at roughly 566, 565, 566 on the S&P. We knew that we had triple witching coming up this week, so that usually leads to some volatility. And that is the horizontal support level that we don't mind if it's tested, but we want to see it hold. So poke, 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 poke at that was resistance is now support at 565, 566. It's okay. Poke, poke, poke. Let's make sure that it's holding. And then the longer it holds, the more likely we are to see follow through buying on the upside. This is a very nice cup and handle formation. You can see the initial drop of about 10%. This drop was about 5%. That 100-day moving average is preserved. And now we make an assault on that breakout through horizontal resistance. So this all looks pretty good to me technically. I don't see any really big warning signs. And as we go into this coming week, the news is minimal. There's really not a lot to drive the action. that favors the current trend that's in place, which is to the upside. So the numbers that we've got coming out this week, durable goods, volatile number, month in and month out. Nobody really pays that much attention to it. GDP. This is our third look at this GDP number. The first time we get a look at GDP, it has a chance to move the market, especially that PCE deflator component, as everybody's been keeping an eye on inflation. We're not getting that this time. This is our third look. It's not going to be a big market mover. So the next big news that really is on the horizon will be the jobs report, ISM services number, and that's not due for 2 weeks. So we've got a little bit of a lull coming in this week. I'm not expecting a lot to happen. So what we'd like to see technically is test that breakout a couple of times. Let's see the market bounce off of it with some conviction, and then we can feel pretty confident that yes, there are still buyers supporting this breakout and that the market is likely to float higher. If that's the backdrop that we get this week, we're going to be favoring the long side, and we're going to be looking for stocks that performed really well in the last few days. I'm not going to give you any shorts because we don't need to cloud our mindset with short positions right now. What do you mean by that? If this rally gets spanked down, and I mean a long red candle like this, a long red candle like that, and it comes back through that 565 level and easily gets down to the 50-day moving average, it means, number one, that there's something new, something hit the market. Could it be a lot of profit taking? Not typically. You're not going to see this type of buying off of these lows to get you through a high like that. It's buyers are in control right now. Sellers have been relatively passive, and that's why we were able to get back up to the all-time high. If sellers were aggressive, blam, 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 they would not have waited for a new all-time high. They would have been selling in here. We would have seen that resistance at the 50-day moving average, and we would have been taking short positions. Here, when we had this next retest, we would have seen follow-through selling to that long red candle. We didn't see it, so buyers are still in the driver's seat. So this means that mentally, all we're going to do is screw ourselves up if we start entertaining thoughts of taking short positions. So focus on the long side. You get a market dip, wait for support, focus on the long side. You'll see that in the Thursday video that I recorded also, why we need to kind of purge those feelings right now. If we get that long red candle, then your thought should not be, gee, I knew it. I missed a great shorting opportunity. Your thought should be, I'll have lots and lots and lots of opportunities to get short if the market hits resistance and if it is smacked down with any kind of strong, high volume decline, okay? But right now, we're not seeing anything remotely like that, so you should be focused on the long side. You should not worry about chasing this market. There is not an asset manager out there who feels that this is the deal of the century. Valuations are high. We barely broke through this resistance level. Yes, everybody's happy that the Fed is ready to ease, so we've got that little bit of a tailwind. So don't chase, wait for those little pullbacks, and then enter your positions. And so if I take a look at ARM and I take a look at that recent statement that I made where I don't want to chase, ARM's had a nice breakout, how would I possibly approach a stock like that? Well, using our new trade signals, which they're fantastic. I love using them. Your thought process would be, here is a cup and handle formation right here. There is our horizontal resistance line visually. Let's zoom in so you can see it more clearly. That's our horizontal resistance level. that horizontal resistance level happens to coincide with the 50-day moving average, okay? So I like the fact that we were getting through it right in here and testing it. We had an opportunity to make some money. So when I see this breakout here, I know that I want to try and buy a dip. So when I saw this forming in here, I thought, you know, I want to be alerted when ARM has a M5 buy signal. So that's what I set. And I'm going to go into the 5-minute chart and I'm going to set those. And you can see, let's zoom out a little bit. The stock has had a lot of sell signals since I set that, okay? Sooner or later, it's going to have a buy signal. Great. There's my dip that I've been waiting for. And now the stock is starting to flounder around. So I set a buy signal here and it goes off and I look at it and I'm like, you know what? I'm not too crazy about this because I would like to be in this gap right in here, okay? I would like to have gotten a buy signal and then seen the stock go right into that gap. It didn't happen. I'm still not seeing the signs of support that would tell me that this stock is ready to head higher. So what I do, I set another M5 buy alert so that when I get it, and I got it on Friday, just before the close, told everybody in the chat room, hey, this is interesting to me. Why? Well, let's take a look at the D1 chart. So again, on a D1 basis, we get the initial move higher, and now what's happening? Same process that we have for the SPY. Whap, 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 whap. Let's see if the bid is real. Well, we have support at both the 50-day and the 100-day moving average. So very important for those of you who do not like to chase breakouts. There's an alternative. Buy dips on major support for stocks that have broken through it, have tested it many times, and now the stock is sitting on it. You are not chasing. You are buying on support. See how that works? So now I've got my M5 buy signal. Do I need to buy right now? No. The stock is just starting to look pretty decent here. I'm convinced that this breakout is going to hold. So what do? I can go into an M5 chart and I will look, where is the high from Friday? It's right there. Okay, click GTC, double click on that high. Now I have an alert. If I come in Monday, and you know from my other videos, one of my favorite ways to use the new trade signals is the stock above the prior day's high? Does it have heavy volume? Was it on an M5 buy signal the previous day without any exit signals? If the answer is yes, I've found those to be excellent trades. So I've got my alert. Tomorrow, Monday, if the market opens higher and the stock is getting through the high from Friday, I'm gonna feel pretty dang good about taking a long position in ARM if that breakout is happening on heavy volume with relative strength on a 5-minute basis. Hey, the stock broke out earlier, week and a half ago, good volume through horizontal resistance, poke, poke, poke. Major moving averages are holding, and now the buyers are back. Yes, I want to join them because this next leg higher is likely to be a really good one. That's how you do this, okay? And I'm not saying that I don't buy breakouts. I certainly buy breakouts, but many of you are so deathly afraid of them that you will not join them. And that's not a problem because you have to trade with what your own trading personality is. That has to be consistent. You have to feel good about the entry point. There's another alert that I can set, and I'll go into H1 basis where you can see the buy signal right here. If I wanted to, I can also set a downward sloping trend line that's going to meet price eventually because it's got a downward slope to it. So if ARM just kind of waffles around, it might take a few days for this downward sloping trend line to be breached to the upside. But when that happens, I'm going to evaluate the volume and I'm looking for that consistency. I want to know that buyers are engaged. I'm going to give you another stock pick because I would use the exact same approach for it. I'm not doing anything right now. Okay? I'm setting the alerts. The market could still be waffling around, trying to find its footing, trying to test that previous was resistance, now support. That's a process. There's no big news this week. It could take a few days for that to happen. All the while, these stocks are getting more and more buying interest and buyers are accumulating, ready to take out the next resistance level. I'm going to go to Green Royal Flush, one of my favorite searches that I use a lot. And I'm going to go to the top stock in it. This is one that I highlighted about 5 minutes into trading on Friday. I love that breakout. And so if you use this same approach on Friday and you said, okay, market's coming in, the market is probing for support, which it did. And what did the stock do during that time? It preserved its relative strength. So you could have set alerts on relative strength. Show me when the stock is below VWAP. I've been suggesting that you use that as an alert. So you got the stock above VWAP because it's strong. You see this in the first 5 minutes of trading. You don't have to wait a half an hour or an hour. It's above VWAP. Let me know when the stock dips below VWAP. Let me know when the stock rallies above VWAP. And so our servers know that if you're using a single variable like VWAP, it is above VWAP. So the server knows it has to go below VWAP and close below it. Then it has to close above VWAP. So if you did that in here, you're going to get your first alert right here, right after the open. And right in here, you can look at it and go, okay, well, what has the stock done? It's preserved all of its opening gains. The market sure didn't do that. It pulled back a lot more than that. And so you could take a long position in here, or you could say, hey, you know what? I'm going to reset the same alert. You could have keyed off of this and said, if you can get through this, click, end of day, click, click. Now I've got an alert so that it will let me know right in here. And then now you've got relative strength in here. So there would have been your next breach of VWAP. That would be a really nice entry point for a long position once you're comfortable that the market probed for support, it found support, and now there's a chance for the market to grind its way higher. So you had opportunities in CRWD to enter this a number of times, and you could have also gotten in here later in the day with a very nice closing move. Relative strength almost the entire day. Look at that volume. That is the tell. You get that big breakout right in here on heavy volume. That's what I saw on the open Friday. Horizontal resistance, cup and handle formation through the 50-day, through this horizontal resistance on heavy volume. Yeah, but Pete, you got the 100-day and the 200-day moving average right up here. There's a lot of room for that stock to move till it gets to those two moving averages on Friday. Okay, so I am not going to let that scare me out of a day trade at all because it's not there. For a swing trade right now, I would not be taking that swing trade. I would not be buying it up here for a day trade either because my upside is very limited. However, if I get a decent pullback in the stock, just like in ARM, and it retraces some of this long green candle, and I get an M5 buy signal, you betcha I want to see that, because I want to see if that volume is still there. I want to see what the stock has been able to do during that dip, because I'm sure it's on an M5 buy signal. Of course it is. It's right there. Okay. So it has to go to an exit. And then if it goes to a buy signal, then I'm going to know about that. So let's set some alerts. Right click, create alert, trade signal, M5 basis. And the trade signals are dynamic. They change. This is not like setting an alert on a 3-8 EMA cross or any of the other variables that you can use. You can see that the buy signals have a tendency to enter at a really good price, and they ride that move for a very long time before they generate the exit signal. Okay, so it's not like an oscillator, and I go through all this in my Thursday video that I recorded as well. So trade signal on an M5 buy signal. It knows it's on a buy signal. It knows it has to go to an exit on our servers. It knows that it has to go back on a buy signal. That is a dip of some sort, and I'm going to be able to evaluate that dip when I get the alert. Did the stock preserve its relative strength? Did the volume remain heavy? What did the stock do during a market dip? Let's say that we have a market dip on Monday. Alerts are so powerful. Instead of having 15 charts up, use alerts. Set it and forget it. You don't have to try and monitor 15 charts with your eyes. Oh my gosh, my eyes are going crazy because I'm having to flip through everything all the time. And you're not going to be able to catch those types of moves by having all these charts up. Alerts are going to let you know when there's something worth watching. It's how you use technology. I can't say this strongly enough. You have no emotional attachment when you use alerts. You're not tying up any of your capital. You don't have to take the trade when you use alerts. You evaluate it. There's a critical price point. Something important has happened. Now let me go back and see how the stock responded to market moves that happened over that same period of time. Held up well. This is a good entry point for me to get into the position. I don't have to feel like I'm chasing. So final note here. We've got some alerts set on CRWD. How about this alert? Right click, create alert. Let me know when the stock is above the 200-day moving average. I'm going to use the 100-day moving average because it's higher. Okay, the stock would have to rally even more. Above 100-day moving average. Another important point. I don't care if that 100-day moving average is breached in the next day, the next week, the next month. It doesn't matter. So I don't need to watch it. I only know that when that happens, I would like to know about it because it's important to the stock, and then it has a chance to fill in some of that gap. CRWD on a pullback, on a buy signal, M5, I'll be evaluating it. Maybe I got a nice chance to enter here as it's still testing that 200-day and 100-day moving average. It would only be a day trade, and I know that this is resistance that the stock will have to try and work its way through. If it gets through these levels, yes, I would like it then as well. ARM, really nice long position. Set those alerts above horizontal resistance. Set that downward sloping trend line right here like we already did. All right, when this is breached, I want to know about it. If it gets above that high, I want to know about it because there's a good chance that the next leg higher is coming and that the market finds support at that technical breakout and it continues to move higher. That's how we trade. We will see you Wednesday. Make sure that you subscribe to the YouTube channel because I'm going to try and do some shorter videos, maybe 15 or 20 minutes long during the week. I don't know when I'll have time to do it. I know it is something that I would like to do. So please subscribe to the YouTube channel, and thank you so much for giving me your thumbs up. Please spread the word, let other traders know that this is a really good source of information and a good trading system to use. Good luck with your trading. We're going to see you Wednesday. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.